that we were looking at here previously this morning. This was a trade that I took this morning during New York. I was a little bit late to the rally here, but I did end up jumping in at a great position, which actually ended up still banking me more or less 70 pips. So that's a phenomenal trade regardless. I'm going to explain to you guys a little bit on why I decided to take this sell on gold this morning, which ended up banking some pretty decent profit. So simple all the time, starting off at the daily. Give me 1 second. Starting off on the daily here, we're definitely in a downtrending market. We could clearly see we're making lower lows and lower highs. Using the fibs to kind of guide us onto where the trend will end is also a very important key structure to use. A lot of traders don't use the fibs, especially on higher time frames, so they're kind of a little bit lost on the directional bias they should have. Always using the higher time frames kind of gives you that overall trend, and to make sure that you're trading with the trend. You know, there's an old saying that the trend is your friend, and that really is something to follow, especially when jumping into the markets, and especially when jumping into a commodity like gold. It's very important, and you should really take that into consideration. So clearly here we broke a very important structure at 1696, where price decided to rally a little bit lower to 1653. My entry was on the break and the retest of the zero. You know, grabbing another fib here to swing high to swing low. It did come once more to the zero. Grabbing it on the new leg, you can see that I believe, like we see here, let me delete some old fibs just to give you guys a clear example. You can see that the 38 was beautifully respected, and as you can see here, we are not quite finished up the trend. If you grab our fib, the 27 here at 1647 more or less is really the area we want to look for sure, closing some profits and getting them off the table. Great, so I had my idea, I had my bias, I had my zone to look for my sell setup on the 38. So what I do here is I grab the red order block, sorry, the red zone here, and here's the green, apologies. And so at that point, I wake up in the morning and I'm just ready, and my head is telling me at this level, you're gonna look to sell gold. There's nothing else you wanna do but sell gold. Great, so jumping onto the lower time frames here, hoping that it meets my, my trade setup. You can clearly see here that price, we're clearly in a downtrend, printing lower lows and lower highs because these highs are never breaking above these highs, and so on and so forth. We clearly have our decent and beautiful break of structure here, which price decided to come back to that OB, that order block right here. Unfortunately, I wasn't available, or I wasn't looking at the markets at this given point, and due to the fact, if I look at the time here, it was roughly around 3 o'clock in the afternoon, New York time. So at that moment, you shouldn't really be looking for a setup regardless. But I grabbed it on the lower high, and that's the beauty of this. Even if you miss your opportunity, there's always opportunities to jump about here. So what I did here was I saw another breaker structure being printed, a lower low in this case. This here is liquidity that's to come and grab, basically. So I do presume we actually have some more momentum to the downside actually. And so what I'm doing here is I looked for that lower high in order to get involved in the market. So what happened is I have my breaker structure here. I have manipulation that was being accumulated at this moment in time. So money sign for the accumulation and distribution. Finally, price decided to come up for a stop hunt, of which, zooming in closer, I'm going to grab the order block that best represents it, which is the last bullish candle before the breaker structure, hence this last candle right here. And as you can clearly see, price decided to snipe me in and follow through. I ended up missing this opportunity here at the highs as it was 8:42 in the morning. Hey, I just wasn't there at that given moment. Most times I am. But price decided to roll over a little bit lower, and I ended up grabbing it at the 1680 mark, and I'm still holding this position for potential lower lows to be imprinted, basically. Grabbing another fib here if you want to see what other fib that represents, and it comes back to the 88, which is a nice liquidity area to jump in the markets. Reversal fib at the 27, and you have the 27 there as well. So there's so much confluence in order to have taken this trade, hence why I jumped into the markets on this. So a cool little update since the last video. It's been exactly 24 hours since then. We're going to update you to see exactly what happened to that gold trade that we talked about earlier in this video. And well, as you can see here, as said in the previous video, that I was looking for a potential downside move to finally take out this liquidity, actually did come in perfectly into play. So I'm going to pop out the trade right here to show you that I actually ended up catching 400 pips on this move. So it was a phenomenal trade. And you know, that comes to say that it comes to show that when you have a plan, trade your plan. And if you know that there's liquidity that has to be taken out, hence the lower low, hold your trade. You know, learn to hold it like a professional trader. You know, a lot of mistakes that retail traders do and beginner traders do is they cut their wins too early, and yet they let their losses kind of prolong when it should actually be the opposite. You should cut your losses early and let your winners run. And that's exactly what I did here for the 400 pip move. So this was just an update to show you on the aftermath of what happened exactly to this gold.